Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday the 17th of March 2021. And later today, the FOMC of the Federal Reserve will be making its announcement on interest rates, monetary policy, including its QE program. We highlight in this video 6 things to watch out for in today's statement. So let's take a look. As a supporting backup to today's video, we published a few days ago a video entitled Will Gold and Silver Prices Depend on the FOMC meeting on Wednesday? And in case you haven't had the opportunity to listen to this, we've included a link below. Now, we highlighted in that video that today, Wednesday the 17th of March, the FOMC will make an announcement on interest rates and bond buying, and Fed Chair Jerome Powell will be giving his usual press conference after the announcement. We pointed out that the general consensus will probably be no increase in the rate of bond buying, and rates will remain broadly as present, and quite likely, possibly dovish, but not too dovish, a statement will be made. We also stated in our weekly update published last Saturday that we were expecting marginally higher gold and silver prices, at least on opening this week, with the data and the Fed's comments perhaps affecting the direction or influencing the direction of their prices thereafter. Well, in a few hours' time, that announcement will be made. What is worth considering, though, is where we are in relation to the markets currently, the US dollar value, and of course gold and silver prices prior to the announcement, so that we can make an assessment after it. Now, the time of producing this video is 12:22 GMT, and so US markets have not opened as yet. However, yesterday we can see that the Dow Jones closed down 127 points at 32,825, the S&P 500 closed down 6 points at 3,962, and the Nasdaq closed up 11 points at 13,471. So despite these falls, all 3 of them are pretty darn close to their all-time highs. Now, UK and European equities, or their markets or exchanges, are of course currently open, and broadly, if not all, are down between 0.25% and 0.5%. Asia-Pacific markets closed overnight broadly up, but in the main less than 0.5%. The dollar index is strengthening this morning and is just shy of 92 at 91.98. Now, gold is down $3 on the day at $1,731, but it's still $3 higher than Friday's close, and silver is down 21 cents on the day at $25.91, some 4 cents lower than Friday's close, but it did reach $26.30 briefly yesterday. So, as mentioned, it rose earlier in the week, it's fallen back slightly, but nothing too great to be concerned about at this stage. So, as we mentioned in our weekly update, there was quite a large amount of economic data, US economic data, being published yesterday, Tuesday, and frankly, a fair amount of it was disappointing to say the least. Retail sales for February was down 3%, compared with plus 7.6% in January. Retail sales excluding automobiles was down 2.7%, compared with plus 8.3% in January. Industrial production was down 2.2% in February, compared with plus 1.4% in January. And the National Association of Home Builders Index for March was 82, compared with 84 for February. Though, perhaps on the other side, the import price index for February was 1.3%, compared with 1.4% in January. So a little mixed data when you look at what's happened this week compared with previous weeks. And frankly, markets are just currently poised, not moving wildly in any direction, at least until the FOMC statement has been revealed. Now, as the headline of this video suggests, we are going to look at 6 things that we should watch out for in today's statements. They're not in necessarily any order of priority, but these are the 6 factors we shall certainly be looking at. 1. Last December, the Fed expected growth, GDP growth, of 4.2%. Now, there's no doubt in our view that this will increase today. But to what level? Goldman Sachs are predicting 8%, but they are the most bullish. We suspect it's going to be somewhere closely mid-range between these 2 figures. The second thing we should be looking for is the Fed's assessment on inflation and where it is headed. Their last predictions saw core personal consumption expenditure inflation, which is their preferred metric to measure, to reach 2% by 2023. It'll be interesting to see if that changes, and if so, by how much, or if the timing changes. 3. Interest rate predictions, and when the first rise in interest rates is to be expected. Now, in December, the median of forecasts by Fed officials indicated they expected the central bank's main interest rate to remain between 0 and 0.25% until at least the end of 2023, with 1 out of 18 predicting an increase in 2022, and 5 expecting higher rates in 2023, so a few years off. Economists are split on whether the median view might shift to predict at least 1 rate increase in 2023, but even if that does not get penciled in, there are bound to be fewer officials predicting flat rates as far as the eye can see. So will they predict higher rates sooner, or fewer increases in rates in 2023, or more? 4. Have Treasury yields risen too far and too quickly? You see, since January's policy meeting, the $21 trillion market for US government debt has come under strain. Yields, which rise as prices fall for the underlying bond, have surged to levels last seen before the coronavirus crisis. Investors will be watching for any signals from the Fed about its plans to manage a rise in borrowing costs, especially if it begins to jeopardize the economic recovery that has begun to take hold. 5. Will the Fed continue with its favorable regulatory concessions on the banks as we ease out of the COVID-19 pandemic? What do we mean by that? Well, in April 2020, US regulators allowed lenders to exclude treasuries and cash reserves when calculating how much additional capital they need to hold in order to encourage banks to extend credit to struggling businesses and consumers, as well as to play a bigger role in the market for US treasuries. So if this changes, it will suggest something quite significant. Investors have warned that a failure, though, to extend these more lenient rules could magnify already volatile trading conditions in the world's largest government bond market. Not extending the exemption would potentially force banks to sell treasuries, and so arguably the least risky path for the Fed will be to extend the exemptions for another 6 months to a year. And 6, though we suspect this is unlikely to happen, the Fed may consider altering the interest rate it pays banks on reserves they hold at the Fed, thereby, indirectly, tweaking the Fed funds rate in such a way to ensure it remains relatively stable within the 0 to 0.25% band, which it has set itself as its current goal. So these are the 6 things to watch out for today, which, if there is little change, will probably see a muted reaction by markets. However, any significant changes in any of these factors, or others that perhaps we're not specifically noticing, will almost certainly have an effect. Now, our best calculation is a reaffirmation of current policy, with the potential of rates rising a little sooner perhaps than originally anticipated, but still well into late 2022 or early to mid 2023 rather than late 2023. You see, they have a difficult balance to maintain here, not least of which being to maintain confidence in the economy while not leading to high rates too soon, which could jeopardize such a recovery. Now, providing what is said today is relatively muted, we don't see too much happening that could boost gold and silver prices. However, if the bank adopts a slightly more hawkish approach, we could very well see gold and silver prices actually fall. Though, again, as mentioned in previous videos, we're still more comfortable and as comfortable with the highs and lows trading range we've predicted for gold and silver published in last Saturday's video. What are your thoughts? What will you be watching out for? And do you think there will be any significant change today? Please share them. Thank you for listening. And if you haven't done so, do subscribe to our channel. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.